Hi, I'm attorney Sarah Holmes, and we have been doing a series of videos for the everyday real estate investor. Now, everyday real estate investors, we kind of count as people who usually have full-time jobs and they want to get into real estate investing on the side. So they might start buying some properties, whether they're going to flip them, whether they're going to buy and hold and rent them to tenants. Often we have these everyday investors as clients of ours, and they have a lot of common questions. So the series of videos is meant to address some of those common questions and hopefully give them some helpful hints and tips. So one area that we often talk to people investing in real estate about is insurance. And people have a lot of questions around insurance. How much insurance should they get? What are the types of insurance? So today we have with us Jen Gregorski of Farmers Insurance. Hi, Jen.
Hi.
And Jen is the owner of an award-winning farmers insurance agency out of Dresher, Pennsylvania. She has over 20 years of experience in the insurance industry, and she has a background working with people on both personal and commercial lines of insurance. And she's very familiar with property investors and the kinds of coverage that they need. So thanks, Jen, for answering some questions for us today. And
some good tips.
Yes, yeah, let's get started with some tips. So first, just talk a little bit about why insurance is important for people investing in real estate.
Well, the main reason that people are investing is to make money. So you're going to be investing a lot of money into buying the building and probably rehabbing or doing whatever you need to do. So the main reason you need insurance is to protect your assets, your risk that you're hoping to make money off of. And that's where insurance comes in. And you're also transferring that risk to somebody else so it doesn't cost you more money in the future. The other thing is most likely you're going to be financing the purchase, and the bank's going to require it. So there's going to have certain limits and terms on that policy that they're going to want to see before settlement.
Okay, so protection, and also usually if you have financing, the bank's going to require the insurance. All right, so pretty critical stuff. So what kinds of insurance would someone need for properties that they're investing in? Often people don't know that there are different kinds of insurance and what they mean.
Well, basically, there's only two types of insurance. You're going to have the building portion of it and your liability portion of it. So obviously the building is, since most people have homeowners, are kind of a little bit more aware of that, but that's protecting the actual building of it. If it burns down, if there's a water claim or something along that lines, that portion covers that. Now, generally, there are two types of policies. There's replacement cost and there's actual cash value. So you need to decide on the front end how you want to insure your house. Do you want, or the building? Do you want it where it is replaced on like, kind, and quality, which might cost a little bit more, or do you want it on actual cash value or depreciated cost? If you're doing a rental out of a row home, you're probably going to want depreciated cost, because if there's a fire, you're not going to be rebuilding with these beautiful crown moldings and plaster walls. You're going to do drywall and you're going to do basic baseboards. So you might not want to spend extra money on the replacement cost, but it's completely up to you. It's available. And then you have the liability side, and that's the side that really protects you in the event that something happens. See, some of the falls outside the property, or some other unforeseen event that someone tries to sue you, the liability is where that kicks in and protects you and your other assets, not just your rental property.
Yeah. So both of those kinds would be critical for somebody that's investing in property.
Yeah, absolutely. Absolutely. And again, the bank's going to require those two.
Okay. What about people that are just flipping property? They're going to buy a property. Maybe they're going to spend 2 or 3 months rehabbing it, doing work. Nobody's living there. Is that a different kind of insurance that they would need?
It is a different type of insurance, and it's not that big of a deal. We're seeing a lot of flippers in the area. You just need it's called a builder's risk policy. So again, it's always going to be the same. It's always going to be the building, and it's going to be the liability. So the builder's risk has both of those. What makes it a little different is the insurance on the building is going to adjust as time goes on, with the understanding that you're putting money into the building and it's becoming more finished as time comes on. So the policies also can be written in different time frames versus usually a policy is an annual policy, where a builder's risk, if you think it's going to take you 6 months to finish a policy finish the building, we write it on a 6-month policy, and we can always extend it if we need to. But it's with the understanding that at 6 months you're going to be finished, and it's going to be ready for resale or rental or whatever it is. And on that policy, you also have the liability to protect you for those same things I was talking about earlier. It's just the increase, kind of the tiered as it goes along. That's the only thing that makes it really different.
Okay. So if you're going to buy and flip and you're looking for insurance, like you should tell your broker specifically, look, like I'm flipping this property, to make sure you get the right insurance then.
You kind of need to tell your broker what you're doing. You can't be shady and try to think you're going to get away with something. It's not in your best interest. I was telling Sarah earlier that I've heard it all. I've seen it all. There's nothing you can tell me that I haven't seen or heard. So you're not going to shock me. Just be honest with me so that I can give you the best advice. And then what you do with that is your own business. But in order to give you the best policy on something that's really going to protect you in the proper way, I need to know what's going on. So you don't be shady with your broker.
Okay. All right. All right. So for people that have tenants in their property, this is something that I speak to people a lot about, because if people come to me and they've already bought several properties, often they'll show me their insurance coverage, and for the kind of people they have in the property, it's really low. You know, for example, they've got 8 young college kids living in a property with $100,000 in coverage, which might sound like a lot, but in a place like Philadelphia, you know, a broken leg in front of a jury is going to run you over $100,000. So, you know, 8 young people living in there. How would you decide how much insurance you should have when you're renting to tenants?
Right. So, I mean, the building's not going to really change. So we have a computer program that will tell us what the building's going to cost to on the replacement value. So we can tell you that. That's not a problem. The liability side, that is such a perfect example to use when it comes to liability. You really need to know who's renting from you, and you need to let me know, because students requires different underwriting than, say, a family with 2 kids is totally different than the students in Philadelphia. I'm going to be totally straightforward with you. I had house fire in college. It wasn't my fault, but I can speak, you know, from experience where the owner was probably pretty glad that we all had insurance, because I know all of our stuff was covered. But there's, you know, shenanigans happen with college students. So it's just, again, it's really important to know who you have, and you're going to need more than 100,000. If something happens to those students, again, like he's a house fire, that if someone's injured in that house fire, like, yeah, that's going to be, might be a couple $1 million in a week. So yeah, you really need to know who you are renting to, and really take that into consideration when you are renting to people, that you're just not kind of going to go after the cash you need to know who you're renting to, because they're going to beat up your place too.
Yeah. So there's no like blanket number that you would just give people on a rental property. You're going to look at the profile, see who's living there, and then, you know, customize it based on, you know, what they're actually doing.
But my base is always $1 million for the liability. I always start at $1 million. You can go lower, but it's liability insurance is very inexpensive. The building is what usually costs more than the liability. So don't cheap out on something like your liability insurance. You don't cheap out on insurance anyway. Again, this is your investment. There's a lot of money wrapped up in this. So I don't think the insurance is a place that you really want to skimp out. You can do it in a smart way, but it's just not the way that you want to cut all costs. There's some things that we can do to help you kind of mitigate some of those, because I know it's all about the profit, but you still need to be smart about it. But I tell everybody start at $1 million, and then you can even go higher depending on how many people are living there.
Okay. So one thing that I often talk to clients about, especially if they come in with these lower liability policy limits sometimes, is getting an umbrella policy. And a lot of people, they've never heard of that. They don't know what it is. So what's an umbrella insurance policy?
So an umbrella policy is it's excess liability. And so think of it literally like an umbrella, where it goes up and above and beyond you to give you the extra protection. The couple main differences, it's much more broad than your underlying limits, and it's going to give you additional coverage. Most umbrella policies cover you worldwide, where your liability is just usually in the United States. So if you're someone that travels a lot out of the country, you should just get an umbrella policy just to give you that extra worldwide coverage. Very inexpensive, and it not only covers your rental properties, but all your insurance. So all your autos, your home, like if you have toys like motorcycles, It's going to cover all of that in addition to your rental properties and just give you an inexpensive way to give you extra liability.
Yeah, because at least from what I've always heard from brokers and agents is that the umbrella policies, are really, really inexpensive to get some good extra coverage there, peace of mind.
And you have to remember that before you even hit your umbrella, it's got to exhaust your underlying limit. So if you're carrying $1 million general liability, you have to go through that first $1 million before you get to your umbrella. So that's why it's kind of inexpensive, because the chances of it actually getting that high are fairly rare. But again, if you're talking 12 college students in a catastrophic fire, you might hit that limit. So it's important to
Right. Exactly. Knock on wood, you don't need the umbrella policy.
We didn't. We're all good.
Yeah. And then a lot of people that rent to tenants, they just ask, well, can't I just force my tenants to get insurance? Wouldn't that cover anything that happens in the property? And how is that correct? Or is that, not something that, is really how that works?
I tell all my landlords that they should require that their tenants carry renters insurance. It doesn't just protect them, but it protects the tenants. In the event of a fire, the tenants' contents, their sofas, their electronics, their clothes, none of that is covered by the landlord's policy. So there's a big misconception that the landlord policy covers everything in the event that there was a fire. Right. Not the case. So the tenant really needs to be carried to protect them. And then also in that renter's policy, again, it's going to have the liability. So let's say, again, the college students, they burn down the place. Well, they have insurance that's going to cover the replacement cost of that building to replace it. So you, as the landlord, want to make sure that they have insurance to do that. Otherwise, you're on the hook and your insurance is on the hook. And that goes against you. You get dinged and have to deal with all that in addition to your deductible. So it's just good financial sense. And renter's insurance is very, very expensive, inexpensive. It could be $10 a month for the tenants. Wow. There's really no reason to not require them to have renter's insurance.
Okay, so yeah, it's easy enough to require them. It's inexpensive, and it could potentially save you a claim in the future.
And if they have cars, usually they get additional discounts on the personal line side. So sometimes it can cost them nothing with the discounts, and the renter's policy is almost free. So yeah, it's a no-brainer. That should be absolutely required.
Okay. Well, thanks, Jen. I think that wraps it up for today. Do you have a website or anything that people could go to look at your agency or your insurance?
You can always visit me at jengregorski.com.
Okay. That's an easy one to remember then. All right. Well, thanks so much for being here with us today and answering some questions, and we will see you soon.
Thanks.
Okay.
Bye-bye.
Bye.